Well, we're back with you covering your ag commodity markets. I'm Marlon Bowling, your tour guide to the ag commodities. And wow, in the last 10 to 15 minutes, things have kind of taken a dramatic turn to the downside here on the grain complex. Let's take a look at Exhibit A here. We'll go to the corn market and see what's going on. Yes, don't adjust your screen. You're seeing that correctly. Corn has now turned lower by 22.5 cents on July. We're at $7.31 per bushel, only one tick from our low of the day. December corn, the new crop month, at now below $7 at $6.93 3/4, and now we're 17 3/4 cents lower on the December corn. Wow. On soybeans, soybeans are maintaining gains on the day despite all this, but boy, they've given up a lot of ground. July soybeans only 3.5 higher now at $16.86 3/4. November up 8 1/4 cents. Then you get to that wheat trade that was limit down yesterday on the nearby July contracts, and then it started out higher today, and now July Chicago wheat again down 23 cents at 10.64.5. And let's check out the Kansas City market here. Kansas City on that July contract down 17 1/4. We're at 11.48 1/4. And if you look at Minneapolis spring wheat, we now have July quoted at 12.25 per bushel. That's down 22.5 cents on the low of the day as we look at it. That would be off of its earlier overnight high by 35 cents. My goodness, so things have turned south in a hurry here in the last 15 minutes. Let's bring in Todd Bubba Horowitz of BubbaTrading.com. He's based in Chicago. Todd, what happened here the last 15 minutes or so? Any idea?
Marlon, I think what you have here is a market that is so quiet that any bit of volume moves it dramatically in a direction. You've got, I think, so much overall confusion of what's going to happen, how it's going to play out here. And it's got me conflicted as a trader. You know, I believe that we're going a lot higher. However, because of my model right now, I'm short corn and I'm short wheat, okay, and still long beans. But to me, I think they're going dramatically higher. I think this is just as they say, a bump in the road to a market that's got to go higher, because between the input costs, between the demand and the food shortage that's coming, there's got to be a huge demand here. The prices have got to rise. But in this short period of time right now, we've got a lot of sellers and we've got thin markets. So when you get some sellers coming in to thin markets, it pushes them farther down than they should go. And I think that's what we're seeing right now.
Is this a case of the old classic flushing out of the week longs?
It could be. I mean, again, the real problem I have, Marlon, in general, and this applies to all markets across the board, the volume is so pathetic and so quiet that it's hard to really get a gauge because you're not getting much participation. And I think you're seeing more of the retail-type trader trying to maneuver through these markets, and I think the commercial are sitting back waiting to put their bigger position on, and I believe it's going to be the long side when they really start to participate again.
Well, I also want to toss in this crude oil market today. West Texas Intermediate crude, I know how much everybody enjoys filling up at the pump. Well, this will add to that pleasure. We have July West Texas crude up $1.39 again today. We're at 116.06 per barrel. Gosh, it had been up to 117.87 before backing off a little bit. That U.S. dollar index today is higher by 624 points. That's usually a negative for ag trade. June futures at 102.390. And then on the Dow, under a little bit of pressure today, we're down 224 points on June futures at 32,747. Well, good to talk with you again, Todd. Thanks for the information. I appreciate it. I'll let you go for now. Todd Bubba Horowitz of BubbaTrading.com in Chicago. I'll be back with livestock info next.